Excuse me. Good morning, good afternoon, good day. Welcome to my weekly market roundup, 7th November 2020. I'm sorry, I'm 2 minutes late. Hi, Jeffrey. Good morning. I went for a shower and it took a bit long time in the shower. Anyway, I'm here now. Thanks for joining. I am Sagar Nandi. I used to work in information technology. I have retired now. I'm swing trading stocks using the Q systems and techniques that I developed. This is my email ID, tradingprofitably@gmail.com. My website, sagarnandi.com, which is basically a traders forum. YouTube channel, Trading Profitably, and Twitter handle, Sagarnandi. I regularly share live stock and market analysis through these channels. They are open to the publics, but they are meant for Q traders. You are most welcome to make use of them. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. Only you are solely responsible for the outcome of your trades. This is a live session. I have not prepared for it. It's a YouTube live session. I'll use the trading systems that I use in my live trading to look at the market. I use Q Elite and Q Global Q Finder for technical analysis. Q Elite runs on TradeStation. Q Global Q Finder runs on MetaStock, and it works on the Zenith data or Refinitiv Reuters data. For fundamental analysis, I use Q Vital. Sector industry rotation analysis in real time, I use Q Edge, and market level index analysis, Q Index. If you ask me what is the secret of my trading success, and the success is visible from the trade ideas that I share on my forum, sagarnandi.com, before knowing the result. The secret is nothing spectacular, nothing unknown. It is just that I am aligning the forces from technical level, fundamental level, and industry level with my trades. And if the market is bullish, then I am only buying stocks. If the market is bearish, I am not buying so much. I am okay to short as well. Today I will look at the market, but other than the usual topics, I will share some thoughts, how I use the Q systems in different ways, and some of the underlying philosophies of my trading. You may know most, if not all of them by now, but I look at many things. I will share some of them today. That was the last slide of my presentation. Let's look at the live system. Also, when looking at the systems today, I will highlight a few changes in the enhanced releases that I made. Let's look at the traders forum, sagarnandi.com, my website. This was and still open to the public. However, the Q high probability trade ideas where I share the Q analysis, they are now open to all the Q users. You can see I have not logged in here yet, and that's why it is showing a dash sign against this category saying that I'm not able to access without logging in. So if I click on the category, it will prompt me for my username or email ID and password. Once I log in, I can access the examples, the trading ideas that I share regularly. That is one change at the forum level. And on the Q systems level, there are several changes, incremental changes. I will point to them when I am looking at the market. Let's start with the global markets. Australian market. I will go through the global markets a bit faster today so that I can spend time on some of the other things I wanted to share. Australian market is continuing to be inside a range. At the upper edge of the range, that is a point I don't like to buy. I would rather wait for a shorting opportunity right now. But there is no such opportunity there right now, so no trade idea. Moving in sideways range. Japanese market, topics index, and I typed it wrongly. This is also moving sideways, right at the trendline resistance in both weekly and daily. Unlike Australian market broke above the trendline resistance, and here topics is below trendline resistance. So I will be more comfortable looking for a shorting opportunity here, relatively speaking. Though the opportunity is not there yet, I may look for it next week. China market, CSI 300 index, moving sideways at the upper edge of the range, near the watermark resistance level, sideways. And UK market, FTSE index, it was slowly coming down, and that is still true because there is trendline resistance and no trendline support in the daily. When it was at the lower end, I was looking for a pullback. The pullback has happened, or rather recovery has happened. Now if it comes down from the trendline resistance, I may look for a shorting opportunity similar to the Japanese market because it would be coming down from trendline resistance. Also, if you look closely on Friday, it had a doji candle, indecisive candle at the swing high at trendline resistance when price is overbought, shown by the stretch band indicator. That is a point I would rather look for short setup. None of the global markets we discussed so far are in an uptrend, either sideways or FTSE index slight downtrend. Only the India's Nifty index was in an uptrend, Nifty 50 index, and that is true again. Last webinar I discussed that if we looked at the recent periods, then it had trendline resistance as well as trendline support. Now it has broken above the trendline resistance, and over longer term period it was in robust uptrend that is continuing. Very bullish shape and bullish color weekly candle. US market was bullish and it is probably still bullish. Let's look at some of the tweets that I shared on my Twitter handle, twitter.com/Sagannandi. Let's look at this tweet. And this is where I am deviating from the regular topics. This is a chart I created from QH. It needs some effort. Let me explain. It has the statistics of top 10 stocks from QH. QH has S&P 1500 stocks for the USA market. QH can be used for other countries as well. For USA market, QH has S&P 1500 stocks, and here we are looking at the top 10 stocks from that list over 1 day period, 5 day period, 10 day and 1 month period, and plotting the percentage gain of the top stocks as bubble. So if the bubble size is bigger, then that is the best performing on Friday. Here we don't have the stock name. That is not the purpose. It is just showing the best performing stocks, top 10 stocks, and their relative performance by the bubble sizes across 2 dimensions. The x-axis is annual earning growth and the y-axis is the Q valuation score of the stock. The purpose was to think and see over many days. I'm just starting this over many days, trying to see if the value stocks are doing better or growth stocks are doing better. Of course, growth stock can be defined in many different ways. Here I'm simply using the annual earnings growth. And I have classified the 4 quadrants in this way. The top right is high growth, undervalued stock. Those are what I call star candidates. You know, in QHQ, Vital Q Index, you are able to filter for the star candidates, undervalued stocks, and undervalued stock and great valuation. Those are the star candidates. And the junk stocks are here, the lower left hand corner. You can say lower left hand. Let me retry here, center to left. They are overvalued and poor earnings growth. Then we have the value stocks here, center to left top part, and the high growth stocks here. So if you look at Friday's top 10 stocks, value is doing better. There are few growth stocks also, but overall value stocks are doing better. And there are some junk stocks. Those may be related to laser industries. On Friday, laser industries did well. Some other underperforming industries also did well. So I'm guessing, I didn't look at them, I'm guessing those may be related to the laser stocks or some other stocks, junk stocks. Now if we look at 5-day period, again the growth stocks are doing as good as or better than value stocks. You can see the bubble sizes. And there are some junk stocks are doing good. Again, maybe the stocks in industries that were lagging for a long time. Over 10-day period, again, value stocks are doing quite well. Growth stocks, very few in the top 10 performer. There are some junks that are expected because laser industries, etc. Several COVID-related, COVID-affected industries were lagging for a long time. And again, for 1 month period, value stocks are overall doing well. So what it is showing that if we are able to buy value stocks right when they are starting to go up, and value stocks usually means, usually not always, usually means they are at a lower price level. So when they are starting to go up, this multi-period value versus growth analysis seems to show that that is one of the ways, techniques to catch the trades that are highly profitable in terms of percentage move. Does it tell that high growth stock investing is not as good as values investing? That is certainly not so, because here we are not considering the stocks that are going up by huge growth percentage. Of course, here if we see there is one stock here more than 100% annual growth, only two, and these two may be actually the same stock. In fact, these two may be the same stock appearing over 5-day period and 10-day period. I'm guessing that. So when a stock's growth is very high, 100%, 200, 300, 400%, or even 1000%, and that growth is continuing quarter after quarter, those are true high growth stocks that IBD style investors or HSI investors trade. When they go up like rockets, as Jeffrey always mentions. But if we look at moderate growth stocks, like anything above 25%, 25, 50%, 70%, those stocks not necessarily do as good as the undervalued stocks. That is what this graph is showing. Also, it is showing that in the recent periods, be it 1 day, 5 days, 10 days, or 1 month, the very high growth stocks with more than 100% earnings growth, they are not coming in the top 10 list. Now, one reason value stocks have a tendency to go up by bigger percentages because they tend to be lower price stocks. So they tend to go up higher on a good news or better earnings. So my favorite category is of course the star category, where a stock is undervalued and with high, not necessarily extremely high earnings growth, but high earnings growth. So I have started sharing this snapshot from time to time. As I mentioned, it takes some effort to create them, but the data is in QH. It is possible to create these charts from QH. Now, one trade idea that I shared on a star candidate, okay, let's look at here, that was on UCTT on my traders forum. Okay, let me search for UCTT. Did I share it here? Yes. The stock I described in today's webinar. So in fact, I described it in the previous webinar, and then I shared further detail of that stock in the forum post. It belonged to semiconductor equipment and testing. And now I am coming back to the point why my trade ideas tend to do quite well, because I am aligning market, industry, fundamental, technical level forces in a very disciplined, systematic, as well as easy to use manner. So I'm looking at the stocks industry, in this case semiconductor equipment and testing, when I shared it 4th November, and I shared it before 4th November in the YouTube live session. The industry was strong, going up. And this is the star trading candidate. In terms of fundamentals, UCTT, great valuation shown by cyan color valuation score and earnings growth. In this case, it is not moderate, not more than 25, more than 50, it is more than 100%. And that more than 100% earnings growth is continuing for 3 quarters in a row. Also, it had a short squeeze potential. That is the kind of stocks that do very well if I find a star candidate undervalued plus with earnings growth. But those are not common occurrences. It is not common, rather uncommon to find a stock that is undervalued with high earnings growth. When you find it, and if it gives a proper trade setup, you may take it with confidence, even more confidence. So this is what I saw in terms of industry and fundamental strength. And in terms of technicals, I saw it was at weekly trendline support. In daily, it was breaking above trendline resistance. And in the YouTube video before this post, I mentioned that the even better time to buy it was when it was right at the trendline support, both in weekly and daily, and then went up with a yellow candle color, traffic light candle color. So it was not bearish anymore. You could buy at that time, or you could buy it at a breakout point as a breakout trade. I am more of a buy low at the swing low kind of trader. Sometimes I take breakouts. I had a position in this. So after this breakout, even after I shared this, let's see what happened to the stock. Let's look at UCTT. The forum post was 3 days ago. UCTT. And if I change the daily template to see the historical memory resistance lines, your first buy point could be here at support, or next buy point at this point as breakout. On Thursday, it broke out of the second trend line resistance as well. By that time, more than risk distance was covered certainly for this entry. Now on Friday the market was not very strong. However, this stock still ended up. I have already booked profit in the trade. Now the weekly is looking very bullish. So the right decision would have been to book partial profit and let profit run using trailing stop using the Q protection signal. So Q protection level is here now. So we could leave the remaining position, partial position, with a trailing stop at this point. These stocks, if you are taking the trades combining industry fundamental technical analysis, then the likelihood of the stocks trade stopping out before hitting initial profit target is much lower. One thing I'm still trying to figure out is how to hold a stock for longer period. I'm not good at that. The basis of my trading style is here on the forum. Here, I shared it earlier. There are a number of calculations. I'll not go through them, but it is what I am implementing. Just expecting reasonable success rate with reasonable reward risk ratio. Here, uh, reasonable reward risk ratio, reasonable success rate, and just keep on taking trades, and that gives very high percentage profit at the end of the year. Of course, very high percentage is relative term, but at least 20, 40, 60, 80% return using stocks. Now I have observed some of the stocks, if I held longer, would have done better in terms of profitability. For example, and I'll come back to the usual market analysis also, but let me review some of the thoughts that I have. One trade idea that I shared earlier was on CRDF, an oncology stock. I first shared it on September 17th. And how did I find it? Here I found it as a high growth stock. Valuation was not great, but that is okay. Biotech stocks don't always have good valuation. It had a short squeeze potential, and it was at the top of the list on that day. When I shared it at 1 p.m. Eastern Standard Time on 17 September, it was up by 54%. But I could buy it earlier using fine-tuned chart, and I saw that it was a down but not out kind of stock in the monthly chart on the left hand side. From 900 it dropped to $9, below $9, but on that day it was breaking out with very high percentage gain. I could catch it at the right time because I could find it easily using the Q systems. Now I booked profit along the way, but let's look at CRDF now. I initially shared the idea and took a position on this day. Along the way, it went up. My entry price was somewhere here probably. It gave more than 100% profit and I booked profit. Then it displayed a bearish headwind signal. From there, it nicely pulled back nicely, considering that the headwind signal worked pretty well, the possible reversal signal. But then it has gone up again. If I could hold on to the trade, then I would have a significant profit, even bigger profit now, more than 100% profit. I came out at 100% profit. Now, the question that I am not able to answer unambiguously, decisively is, what do I do when it pulls back so much after displaying a headwind reversal signal? Because high growth stocks can go up fast, biotech stocks also can go up fast and come down fast. Now, if I use the trailing stop, and whatever trailing stop you use, when a stock goes up sharply, the Q protection signal protects the position very well for swing trading. But also the stop is designed to protect the profit if it pulls back. So if a stock, high growth stock, is going up and you apply trailing stop in any way using the Q protection signal or other stop mechanism, it will get stopped out when it pulls back. If you are going to hold it for the longer term, then such trailing stop will not work. We may have to move to the 50-day moving average, or in our case, not 50-day moving average, but the yellow direction line. Now, if price actually hit the yellow direction line on the way down, then almost all the profit would be gone. And there was no guarantee that after hitting yellow direction line, it was going to revert back up again. That is the challenge I see in holding long term. I know many traders do extremely well holding stocks long term, and my thought is that probably they have very high level of confidence in the stocks that they can continue to hold it in spite of these down moves. So I need to probably train myself, but I still am trying to figure out how do I know that after this sharp pullback it will go up again. I don't know that yet. So I am continuing to do swing trading. That is also working out pretty well, but this is something I am keeping it in mind. And the charts that I am sharing sometimes and I'm creating is to see is there any clue in terms of this bubble charts that I can find out stocks with very high confidence, not for swing trading, for longer term investing. And so far my conclusion is, if I find stocks like UCTT which are undervalued with earnings growth, star candidates, then it is possible to hold them for longer term with higher confidence. Not CRDF, because CRDF went up, but it is not with great valuation, with great earnings growth, but it went up because it is a biotech stock, oncology stock, it had some good data. If we talk about non-biotech stocks, then the proper approach I am figuring out so far is to buy undervalued stocks with high earnings growth and buy them at a lower price point and hold them. And like Dr. Jeffrey says, maybe use synthetic options positions and at the proper times sell out of the money calls, buy out of the money puts to protect the positions. Yes, I see Dr. Jeffrey's comment. Big winners have to be held to get the benefit. Taking profits and letting half run works for me. Of course, you risk losing your gains as well. What I would like to learn from Dr. Jeffrey in maybe in one of his next teaching sessions is how to apply the stop. How to apply? Is it using options or using 50-day moving average yellow direction line? In case I am holding it, thinking of holding it for longer time. So far, I am not able to hold it across maybe 6 months. Over 6 months, I am coming out before that. Swing trading is working very well. I'm thinking of creating a separate account for longer term investing. So I'm playing around with that. Now, Mike has a question. Can we create these new charts? It needs some effort. The bubble charts that I showed you, those are actually created based on the data in the stock page. It's using Excel graph, but it needs some work. First, we have to look at the 1-day period, the top 10 stocks, get that data, and then plot it across this dimension valuation and 1-year earning growth. Then I have to do the same thing for 5-day period. Then I have to do the same thing for 10-day, 1 month. There is no limit to what kind of graphs analysis can be done using Q systems. One reason I selected the Excel facility is because it has excellent analytics features. I didn't have to build them. It is very difficult to build such flexible features in a custom build system. And I am not trying to create such charts as part of the Q Edge Vital Index because there is just no limit. For example, I showed the bubble charts using yearly earnings growth. Somebody may say, no, I will use weighted average of multiple quarterly and yearly earnings growth, or I may include revenue growth. There is no limit. That's why I'm not trying to create a packaged list of charts, and you may see I am also changing the charts from time to time, the ones that I share on Twitter. But you may, Mike or everybody else, can create your own charts using QH. You may select the data and then use the Excel facility, insert, and then recommended charts and use different chart formats. Many different charts are possible. That's how I'm creating them for now. But as I said, there are just too many possibilities. Now coming back here, some other thoughts here. Two more thoughts before I go into the market. Why I'm spending more time on non-market analysis today? Because probably it's not the best time to buy stocks. The election uncertainty is still there. There is a question about find a tutorial to learn about Q systems. If you go to the sagarnandi.com, then you may hit this button. Graduates, the entire learning mechanism is there. It will take a while to go through all of them, books, videos, forum posts, but everything is available from this link. Okay, now coming back to a few more things here. This is a tweet I shared on Friday 12:30 p.m. Eastern Standard Time, and this is to explain how I am anticipating a trade beforehand and getting ready. This is a sonar or radar view, Q radar view for the market ETFs. DIA, IWM, QQQ, SPY. I saw that two of the four market ETFs, DIA and SPY, had hit the memory resistance and bouncing down from memory resistance. That was as of midday. Now, when I looked at the relative performance column, I saw that DIA is in red color. That showed that DIA was weaker than SPY. So if I wanted to short one using the memory resistance bounce, I was going to use DIA. I was not going to use SPY. That was my analysis from QRadar. And then I looked at their technical charts using the intraday fine-tuned template. Because it was past midday, I was using 10-minute interval. And as of that time, I saw that DIA was breaking below trendline resistance. Sorry, not trendline resistance, breaking below trendline support. QQQ was very bullish and SPY less bullish than QQQ, but it was still holding the trendline support. Now IWM Russell 2000 ETF was already down, but I was not planning to short IWM. Why? Because on the daily interval there was no signal on IWM. None of these cells lit up with red color, telling there was no bearish setup possible on IWM for swing trading. For day trading it's different thing, but I am not doing day trading here. I am trying to get ready with one of the market ETFs to short at the market close, and for that the possible candidates were DIA and SPY. I looked at their intraday chart and I got ready with DIA. Now let's look at the daily and weekly standard template, the at a glance template for dia. Remember the global markets I analyzed. When an instrument is moving in a range, at the upper end of the range, I am looking for a short setup. That is why dia I was keeping an eye on. However, on Friday, it closed with bullish color, green color, closed with a lower tail, and the bear release signal I was looking for didn't come, or at least the candle color I was expecting to change to yellow, that didn't happen. There were several updates with very high volume, so I think it was a good point to try to short it. Now if I was going to short dia, and I might have taken a small position in it, I was not going to use the ETF. I wanted to not put the stop. If I had a short position using ETF, I had to put the stop. However, I see there are multiple more trendline resistance. So I may get stopped out if I shorted using ETF, and then price may come down again from the other trendline resistance. There are multiple in weekly charts also. Relative performance is tilting down. That was another reason I saw from radar itself that I was choosing dia. So because I was not going to use ETF, I was going to, for not getting stopped out, I chose short. What would be for very straight? Short call vertical. So I chose maybe around 283 short call and buy somewhere here, 292, beyond the outer trendline resistance. Short 283 by 293, not November expiry, December expiry. So more than 40 days to expiry. And this vertical gave me very attractive reward risk ratio. Why so? Because when an instrument went up sharply like this for a couple of days, the near the money call options are usually, not always, but usually the near the money call options are much more expensive than the out of the money. So because I sold near the money, at the money, or near the money, and bought out of the money, my reward risk ratio was very attractive. And now even if it goes up, goes up, and just before expiry sometime it comes below my entry price, then I will have a profit. That is how I initiated a position in dia using fine-tune chart. Now if we are following Q technique, and most probably all of you are either in the USA time zone, mostly USA time zone, some maybe in European time zone, for you, you may wait for the market close. And if I waited for the market close, I wouldn't take a short vertical position in this dia. However, I don't have a loss, and I expect to make a profit. When an instrument goes up so sharply for several days, stops at a memory resistance, and multiple memory resistance are nearby, I expect to make a profit in this stock. What I explained is how I am using the Q sonar, the real-time radar, to look at the signals during the day and get ready, choose one of them looking at the fine-tuned chart and get ready to take the trade. We should take the trade near the market close if we are following Q technique, but sometimes because of my time zone difference I may take it early. But again, I protected myself. I didn't short the ETF. I used short call vertical. That so far is working all right for me. Let me close this. This is one. This is another tweet that I wanted to share. This is another example, and these are very optimal trading points when an instrument is, you may say, in a range because it has trend line resistance and support. This is another stock. it is inside trendline resistance and support, and from support it went to resistance, came down sharply, traffic light candle color changed to neutral, the bear release signal appeared, it came down with heavy bearish pressure, and it had a reversal candle. In fact, when I was anticipating a trade in Dia, this is what I was looking for. I was looking for a change of candle color in Dia to yellow and at least a bear release signal. I was not expecting a reversal or bearish pressure in Dia because it's an ETF, not a single stock. But this is what I was looking for, and they tend to work very well, and the optimal set strategy is not to use the instrument but to use short vertical. Again, here also there are many trend line resistance. So if we use short vertical with 45 days or 2 months to expiry, there is a high likelihood even if it goes up, at least for some time it will come back. Now if it goes up against me, when it comes back, second chance. If it gives me a second chance, I exit. So if I use a stock or ETF, I would get stopped out if I'm using a vertical. If it gives me a second chance, I exit. I don't wait for it to continue to go down. On the other hand, after I initiate the trade, if it goes down first before going up, then I try to book profit either at the support, which would be at the lower boundary or trend line support here, or I book the profit anywhere at or above 50% of max possible profit for a vertical. So either of them. Why either of them? Because when a vertical is having 45 days to 2 months to expiry, if the stock suddenly comes down now, say next 5 days, next within 1 week it hits my target, the vertical profit will not reach its maximum potential, nowhere near maximum potential. But just because my profit is not reaching maximum potential, I cannot overstay my welcome period. That is how you may see it. The welcome period is here. Welcome location is here. Just because my vertical doesn't have profit, market doesn't care that I have a vertical position. If I continue to hold, my profit will erode. And I never know whether later it will come down again. So it will be adding to my uncertainty. So what I do, if I'm initiating a vertical position, and in this case short call vertical, when it hits my profit target at the price level, then I exit, or condition, not at end, or 50% or above my maximum profit. And because I am using short vertical, not long vertical, my profit will be higher even if it comes down fast. If I used a long vertical, that is long vertical would be using put. If I used a long vertical, when it hit the support, my profit may be less. But short vertical, my profit will expand faster. So this is a stock that I shared in the forum, and let's look at the detailed analysis. I think I caught it at the right time. Right time doesn't mean that it will make profit. Right time means I did my homework. Technically, it was at the right point, and I looked at its industry. By the way, these charts are also created using QH. As I mentioned, there is no end to the number of different charts you want to create or you may be able to create. So I am not making them as part of the system. I keep on changing them. But this is the industry of the stock, and I looked at both its industry and alternative industry. In this case, both of them are same. I'm looking at their percentage change, the industry's percentage change, 5-day period, 2-day, 1-day, and real time during market hours. And it was gradually coming down. And industry scored relative to others across those same periods, it was weakening as well. And from 2-day to 1-day, it decreased a lot from 94 to 22. So I'm expecting from this chart that it had deceleration as well. And indeed, when I look at Q Edge scorecard, it is very weak. When I shared it yesterday, 3 p.m. Eastern Standard Time, it was very weak and it was decelerating as well. So I found a stock to short when the industry was weakening, decelerating. Technically, it was at resistance while being in a sideways range. And fundamentally, it has good valuation but negative earnings growth. As I mentioned, I am not able to get both valuation and earnings growth aligned all the time, which is okay. I am looking for one of them. Here earnings growth is negative and again negative for 3 successive quarters. Yesterday in itself the industry was very weak. So for PFG also I took a position, and because of these resistance lines again I used a short call vertical. And let's look at PFG's weekly and daily together. The weekly is also having trend line resistance, so I used short call vertical and it is already in some profit. While I am at these charts, let me explain the new band indicator in QLE. This is showing the candles where the flow color is cyan or magenta. So this is equivalent to the ribbon in Q Global. Q Global had the ribbon which made it easier to know where I have a possible trend following long setup. So in India's Nifty 50, for example, this could be a possible trend following long setup. The candle color turns cyan. Sometimes I have difficulty distinguishing between cyan and green. That's why the ribbon was useful. In fact, one of the Q traders, Sridhar, asked me if the ribbon can be added to Q Elite, and there is no ribbon facility, so I added it as a band. And the same thing, just like ribbon in Q Global, it is there in the weekly chart as well. Another thing that I added, a small change but useful change, is the yellow color in stretch release. The stretch and release signals are part of the box setup. So box setup says that let's take PFG as an example. Box setup says that if an instrument is moving inside a range, then wait for it to go to the extreme, either extreme, then give a release signal. This is the release signal, in this case bearish release, shown on the candle and also shown in the band indicator. And prior to that it was overbought or stretched, and then the stretch is released, so bearish stretch release. And the candle color has to be not bullish if I am taking a short trade. So earlier the stretch release used to be red without looking at the traffic light candle color. Now to make my box setup identification easier, I added the yellow color. So for example, in this case, it was oversold. From that, the bull release came. However, the traffic light color was red, not yellow. Therefore, it was not allowing me to take a box long setup. That's why I changed it to yellow. Now, if it is a stretch release in yellow color, you see it doesn't appear on the candle chart, and the yellow color tells though the oversold condition is gone away, I am not able to take a box long setup in this case. On the other hand, at the top, traffic light candle color changed to neutral, sideways movement, then bear release preceded by heavy activity. So it allowed me to take a short setup using the concept of both the bounce short using trendline resistance or sideways double top and coming down, that's box and bounce combined together. And it had a reversal candle bearish pressure. Those are additional factors that favored the short trend. Those are the two changes I made in the band indicator and in here. The stretch release adding the yellow color. the stretch release yellow color has been added to Q global also, as you can see here. So here it was overbought. Let me draw a line. It was overbought here. Then in the next candle, the overbought or stretch condition went away. However, the traffic light candle color was green. So it was not allowing me to apply the box short setup. And that is why I added yellow. So when I look at yellow, I know I cannot apply the box short setup or box long setup, as the case may be. Let me check my email. What are the changes were there? Okay, some useful changes on Q Finder integration. Okay, maybe I'll go through that when. Okay, I am running short of time. Let me close these charts. Let's look at the market and then I will briefly try to touch upon the other minor changes, incremental changes. Let's look at the market quickly. S&P 500 ETF SPY right at trendline resistance in daily, weekly both. Not a point where I like to buy. If you watched my earlier video, I was buying here. In fact, now I have very few long positions, if any. Instead, as I mentioned, I have started sharing shorting ideas for swing trading in my forum. And most like most other global markets, USA market is now starting to move in a sideways range. When we look at this chart, does it feel like that a very major event like US election was taking place? No. When we are looking at news, it feels like it is like so important we must look at it. But when we look back, it's just like normal movement in the price. As if price was meant to go up from support to resistance, those lines were already drawn, and as if it is time to come down. We may as well forget that the election was going on and take trades. Of course, elections are still major events. It could and it can still make major moves in the market, but so far it is just normal movement. SPY sideways range at the upper edge, not a place for me to buy. QQQ, the only ETF that was up on Friday and you may say break even, unchanged, very small percentage up move on Friday, but still positive, but very small change. Also moving sideways and in weekly at trendline resistance. Dia, I already showed it is in trendline near trendline resistance. I opened a short vertical bearish position. And IWM, though on intraday charts it was weaker, I showed that earlier, the weekly is very strong and it is at watermark resistance. It has trendline resistance as well, some distance away, but you may say this is also it's not as much sideways range as others, but IWM has a tendency to be the best performer and then quickly turn into the worst performer. So none of the ETFs are giving me confidence to buy. Again, I was buying at the swing lows. That is my technique. Now yesterday QQQ was the only ETF that you may say unchanged, hardly went up, but that was driven by these mega cap stocks. The mega cap stocks for the beginning of the day, in the middle of the day, they were up, and you may see near the end of the day by close, most of them turned negative. If we look at Google, for example, I'll not go through all of them. It's still bullish. It came down from Thursday, but it is still very. Mega cap stocks are very bullish now. Again, this is not the point I like to buy. If you remember my earlier webinar, when people were very bearish, probably last weekend, I showed not only the market details, but the mega cap stocks were near support. And I mentioned that was not the time. That was also one of the reasons I was not going to look for shorting opportunities. Now they have gone up, and I saw already none of the mega cap stocks are bearish. So I am not very bearish on the market, but because the market ETFs are near resistance, I am not going to buy now. What about the market breadth? Looking at the sectors and industries and stocks from 1 month to 1 day. 1 month is very bullish. 10-day was bearish, but then it started to strengthen in spite of the election uncertainty. It became very bullish. On Friday it weakened, but not very bearish. We'll have to see what happens next. But because Friday weekend and the market ETFs are near resistance, I'm not looking for buy setups now. What else to look at? I always look at week to week comparison of the sectors. Again, the charts are creating from QH. There is no end to how many charts one may create. This is 1 week ago. This chart show week to week comparison, and this chart is 1 week ago, this chart is this week's. So 1 week ago, from bullish, the sector became bearish and very bearish 1 week ago. That is why 1 week ago, many people were bearish, but I was not bearish because I saw the mega cap stocks market ETFs were at support. I was looking for a bounce up, and that happened this week. From extreme bearishness, it became very bullish this week. And now I saw some people are saying it is a follow through day and maybe a Eureka day in HSI terms, and those are very powerful concepts, no doubt about it. Whether it is HSI, Eureka, or IBD follow through day, those are very powerful concepts. However, they don't take into account the support and resistance lines that may be on the charts. And if you apply the memory trendline resistance, in spite of having a follow through or Eureka day, you may not want to buy right now. At least I would not like to buy. But it is certainly bullish. Bullish doesn't mean they have optimal buy point. In this case, they are bullish but at resistance, so I'm not going to buy. But sectors are bullish, no doubt about that. What about Finder? The weekly picture, as we would expect, is very bullish. It shows the balance between bearish and bullish signals, all the Q signals. Here for weekly period, 89% of all signals are bullish, 98%, almost 100, amazing. Strength signals are bullish, 91% of trend continuation, and even 81% of reversal signals are bullish. So the week is very bullish, no doubt about that. What about Friday? This is Q Finder for Friday. Now 70% of all signals are bearish on the daily interval. Strength signals are balanced. Trend continuation bearish. Reversals are bearish. And this is why when I looked at the reversal signals being most bearish on Friday, I was looking for a reversal setup. And that is how I came to the two ideas that I mentioned. Dia was giving a potential reversal setup at trendline resistance that didn't materialize, and PFG is it? Let's see. Yes, PFG. It did give a reversal setup. Why did I look for a reversal setup? Because from Finder, I saw that reversal setups are probably more likely to happen now. That is how I am looking at the Finder, looking at market support resistance lines and deciding what to do. First, I decided I would not like to buy. That is a decision I took from market ETF studies. Then I looked at the Finder and I saw if I was not going to take long positions, am I going to take trend continuation shorts? No, because the market was very bullish, just reversed from trend line resistance for market ETF. So I was looking for reversal signals. That is why I chose box or bound short setup. I didn't try to go with flow trend following short setup. Now, did I look at only market ETFs? No, I looked at market futures also, and also I looked at the market breadth. Again, 1 week ago, I explained, in spite of these dips, that I was not bearish, I was bullish, and this is the Nasdaq Composite Index. It has nicely gone up, but Nasdaq Composite Index is right at trendline resistance. NYSE Composite Index right at watermark resistance where a bearish headwind came earlier. So that's another reason I'm not going to look for buy setup. Another important thing you may notice from this, if you look at advanced decline, there is a huge reversal in both Nasdaq and NYSE composite indices, but the advanced decline couldn't go up above zero. They remain negative. That is a concerning signal. New high low went up down volume went up. That is in sync with the price move. But advanced decline is not in sync with the price move. What it is telling that this huge up move is partly or maybe largely, at least partly, is due to the mega cap stocks going up. Under the hood, advanced decline is showing more stocks came down. That is a concern. And when that is happening, when market ETFs, composite indices, everything are at resistance, not a time to buy in my technique. And also, if I look at the market futures, I'll not go through all the market futures, but I'll not go through that to save time. If you look at E-mini S&P 500 futures is also right at trendline resistance. You would buy here, at least I would buy here, I would like to short here. Short setup is not there, but if it comes, I would like to short. Now, will I short the market ETFs? No, not really. That is not my technique. And we are at the 1 hour point, but let me spend few more minutes why I don't trade the ETFs so much. I shared a few days ago that I did trade KRE with a good profit, the regional banks ETF. I bought KRE because I didn't find a good regional banks to buy at that time. I bought here, I used synthetic stock position, I sold cover call, I'm trying to copy Dr. Jeffrey, and I made a good profit. Now, though I traded carry, again, why did I trade carry? Because I was not find a good buy setup in individual stocks. And why don't I usually look for ETFs for buy setups is here. Buy ETF or buy constituent stocks, and which of the stocks. If I look at KRE, the regional banks ETF, these are the top 10 holdings. FRC to CFG, and you can see all of them have about 3.3% plus holding. Together, these top 10 holdings constitute about 35% of KRE. Now, the thought that I always have, instead of buying KRE, I have all the systems. It just takes a few mouse clicks. Why don't I choose the best? Regional banks was going up, so I could confidently buy in the industry, but why not I analyze? And remember, these are the top 10 holding. The other holdings, they may not be even as good as them. Some of them may be much weaker. Remember, this is only 35% of the holding. There is still another 75%, and it's almost all in equities, almost fully invested, almost all in US banks. And how do I know all this? I use icon. Actually, this is how I know all that. If I look for KRE and holdings, these are the top 10 holding, their percentage invested in financials, almost all, maybe some money is in cash. These are the holdings as a bar chart, and you may look at their country allocation also. It's mostly in US. Those are for detailed analysis. What I am focusing on right now is when I look at an ETF, I have these stocks. Why don't I choose the best one? So I can put them on Q Vital, but those you can see. Okay, let me use Q symbol now. See, these are the ticker symbols that are in TradeStation or brokerage platform ticker symbol. So I need to get their symbols from Reuters. So I put them in Q symbol, and this is the latest version of the symbol. I click the play button. It connects with Refinitiv and looks for the Reuters symbol. Very cool systems. I liked it. I got the symbols. I can copy them and go to Vital, put them in custom list, and now it is retrieving data from Reuters doing the fundamental analysis of these 10 stocks. What are these 10 stocks? The top 10 holdings of regional banks ETF KRE. Now they are done and the analysis is done in few seconds. Now what I'm going to look at is for now I'm going to look at their performance over multiple periods of time, and let me scroll a little bit to the left. If we look at 5 days SIVB, in fact if we look at all the period, SIVB is the strongest. Now what this analysis is showing, I'm trying to explain, is that when you have all the systems to do all the analysis, just spend a few more minutes, and this price performance analysis across all these periods right from real time to 12 months is going to show you which stocks are doing better. KRE is an average of probably 30, 40, 50, 100, I don't know how many stocks, but even among the top 10 holdings, this is the difference between price performance over all these periods. Why will I buy an ETF that is an average of so many stocks? So SIVB is great. If we look at the next one, FRC is also okay. Of course, regional banks were lagging for a while, so none of them are so great other than the top one. But still, relatively speaking, I am able to choose the best one. Now, if I look at bit more into the valuation and earnings growth, and Dr. Jeffrey always says Wall Street is always looking for growth, but I want to elaborate a little bit on that. See, SIVB is the only one with positive large relative for a banking stock large earnings growth. That's the only stock. All the others, some of them has positive earnings growth. This is the latest quarter earnings growth, but not more than even 25%. So SIVB did best and it has positive earnings growth. Which one did next best is FRC, which is the only one which has 2 quarters of consistent earnings growth. So what it is showing that those stocks which are having better earnings growth do better. However, when we looked at the bubble charts earlier, we saw that in recent periods, value stocks are doing better. Is there a contradiction? No, no contradiction. Why? Because see, these two stocks are overvalued. Meaning, if you look back over last 3 months, 6 months, 12 months, they have done relatively better. But think about it. When they were undervalued, these scores were in cyan color, could you not buy them at a much better price? And this is coming back to the thought I had, how do I buy stocks that are starting to go up and hold for the long term? I will look for more learning from Dr. Jeffrey in his next training session. I want to master that part also. But this is what I am thinking, that yes, in terms of earnings growth, these two are best and their price performance is best. But if we look at SIVB, for example, where is it now? It has already gone up a lot. How much? Let's look at it from the okay, no, from the bottom to Friday's top or week's top. it is 227%. From the pop-up dialog, I'm reading the third number from the bottom. It has gone up 227%. What I would like to do is buy it as a value stock. Now it is overvalued. I would and remember, when it was a value stock here, its earning growth was not great. How I know that? Okay, let's look at Q Vital again. It has only 1 quarter positive earnings growth, only 1 quarter. At least if we look at last 3 quarters, only 1 quarter positive earnings growth. And when was that quarter? Here. That is the quarter here. Here. All these move up until the positive earnings growth was as a value stock. So I am trying to buy it as a value and let it go up, and I may not close it now. I may continue to hold partial position. Maybe earnings growth will continue, especially if the industry goes up. And that is what I could do somewhat in UCTT. I couldn't buy at the bottom, but I think I bought at a right time, and that is what I could do in CRDF as well. And coming back again, when you have an ETF like KRE, like XLE, XLE is also down very much. I was looking for a buy setup, it didn't come. I shared it in the traders forum. Instead of just going and buying the ETF, and again I did buy KRE because I didn't find a good regional bank setup. But if we do this analysis, you may be able to buy the fundamentally strongest stock, either in terms of valuation or in terms of growth, whatever is your preference. And if we are lucky, we will be getting both. In this case, I am not seeing both. The undervalued stocks don't have earnings growth. However, notice if you look carefully, they are having improving earnings growth. From negative 57, it went to negative 14, from negative 44 to minus 29. And that is another observation I wanted to share. Before a stock becomes high earnings growth, when it is undervalued, it first improves earnings growth. The stock starts to go up well ahead of having positive or large earnings growth. So you may keep that also in mind, and instead of buying ETFs, you may consider doing this analysis to buy the strongest stocks. That may give overall better performance, and that is the reason I don't like to buy ETFs. I like to buy individual stocks inside the ETF. One exception is there when I am hedging. When I have a number of long positions, I don't want to exit them. I may hedge using the market ETFs put options. Then I'm not going to buy put options on all individual stocks, and many of those stocks don't have liquid options. Instead, I may do some rough calculation, very simple rough calculation, and just buy puts on the weakest ETF, market ETF. So what is my market view now? The sectors are very strong, markets are overall strong, but because they are at resistance, I'm looking for short setups now, not long setups. Will that change? Yes, if SPY, QQQ, DIA, all the ones that are at resistance, if they can break out of the resistance, then I will again start to look for buy setups, and I may do a easy top down bottom up analysis to find them out. There are few more things that I wanted to share, but I will not take more of your time today. I will try to schedule a session, tutorial session on Q Finder. I will try to do that sometime next week. Remember, the election uncertainty is still there, so it's not the time to invest a lot. At least I am not doing that. However, if opportunities are there, I am buying or shorting. That is all that I wanted to share in today's session. Thanks a lot for joining. I look forward to seeing you in my next session, which will be on Wednesday, hopefully at 8 a.m. Eastern Standard Time, using same YouTube live session. Keep safe. The virus is still there very much. Keep safe, have a great weekend, and trade profitably. See you again. Thank you.